Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a legendary investor and best-selling author, Mr. Jim Rogers. It's an absolute honor to have you on the show.
I am delighted to be here, Jesse. My pleasure.
So let's
My
get
honor.
started. Yeah, thanks. So I want to get started like I do with all my new guests on their origin story. How did you first get involved in investing? I know I've heard you speak before that you kind of stumbled into Wall Street without knowing much about it and fell in love with it. Could you explain to us how that happened?
Well, my senior year at university, I went and interviewed companies just for the experience. And there was a guy I liked a lot, and he liked me a lot. He happened to be on Wall Street. I knew nothing about Wall Street. I knew it was in New York. I knew something bad happened in 1929. I knew there were stocks and bonds. I thought stocks and bonds were the same thing. I didn't know anything, but I went there and fell in love with investing and didn't go to grad school. I didn't go to law school. I didn't go to med school. I didn't go to business school. I got to Wall Street as soon as I could.
So you're very well known for investing in commodities. In fact, you created a commodities index, the Rogers International Commodity Index. Could you walk us through how you got attracted to the commodities space and what led you to launch that index?
Well, for whatever reason, when I first started investing, I studied everything: bonds, stocks, commodities, currencies. In those days on Wall Street, people mainly only invested on things on the New York Stock Exchange, maybe over the counter. It wasn't called NASDAQ, then it was called over the counter, if they were a little bit venturesome. So other assets were pretty much ignored. But I wasn't smart enough to ignore everything else. I talked about foreign currencies, foreign markets, everything. And I read the commodity page in the Wall Street. There was one page every day in the Wall Street Journal, and I read it every day. And eventually, I came to understand that there were good opportunities there. And as I said, we invested in everything,
Right.
and
And
including commodities. And I realized there were lots of opportunities in commodities.
yeah, and speaking of commodities, I've heard you speak about agriculture a lot in interviews. I think that's an area that far too investors have exposure to, and particularly these days when we see, potential food shortages, of course, the whole Russia-Ukraine conflict, increased fertilizer prices, restrictions on farming are starting to happen in places like the Netherlands. It seems to be the perfect storm for a food crisis, which is unfortunate. But do you see any opportunity there at the moment in the agriculture space?
Well, agriculture has been a disaster for 20 or 30 years. That's why one reason why people ignore it. But many people know that if you find a disaster and you find it when it's changing, you might make a lot of money. And in my view, I know agriculture has been a disaster. I mean, the average age of farmers in America is in the late 50s, 58, 59. In Japan, it's 66. Japan and the rest of the world have been a disaster for agriculture. So it might lead to an opportunity there. In my view, it does. And either we're not going to wear clothes, or we're not going to eat, or something is going to change.
So when you invest in the agriculture space, or let's say somebody who might be interested in the space, what do you think is the best way to approach it? Is it through something like an ETF? Is it through looking at individual securities or futures? How would you approach it?
Well, first of all, don't invest in anything unless you know what you're doing, unless you yourself know a lot about it. Don't listen to some guy you see on the internet. Only stay with what you know. But then if you do know about agriculture, there are many ways you can buy seed stocks, tractor stocks, fertilizer stocks. You could buy, in some countries, you can buy shares in plantations or big farms. It depends on the country you're talking about. Or you can buy futures if you really know what you're doing. If you understand futures, you can get rich in a week. You can go broke in a day if you don't understand what you're doing. Or you can buy ETFs. I mean, many studies have shown that index investing outperforms most investors most of the time. So, and it's for me, I use ETFs partly because I'm lazy, but also because I know they're going to outperform most investors and probably even me.
Yeah, that's great advice. Now you're also known for investing in what many traditional investors would consider high risk jurisdictions, emerging markets, developing markets, places like China, Russia, Uzbekistan. What attracted you to those types of places to invest? And do you think investors should be looking outside their country's borders more often for potential opportunity?
First of all, one should understand that there are many opportunities in many places in the world besides your own country. There always have been and there always will be. For instance, 50 years ago, most people didn't know Japan had a stock market, just as it was on the verge of becoming one of the greatest success stories of the 20th century. So always be on the lookout for other markets, other opportunities. I mean, Sony, you've heard of Sony. Well, when I was a kid, nobody heard of Sony and only bought American TVs. Well, that was pretty foolish in retrospect. So one should always be on the lookout for other opportunities, and that often means other countries. There's no reason to be afraid of other countries. At least I didn't think so. Maybe I wasn't smart enough to know that I should be afraid of other countries. But no, when somebody once wrote an article about me and called me the Indiana Jones of finance or something, I didn't think of myself that way. I just thought these were cheap markets. And somebody came up with the term emerging markets. I never thought of them as anything other than cheap markets with good opportunities.
So I want to talk about gold and silver a little bit today. I don't know if you've got your silver coin with you today, but I brought one right here, Canadian maple, and
Oh,
awesome,
we have two. We have two.
great. So I want to get your opinion on the precious metals markets right now, because a lot of investors are a little disheartened because they believe that record levels of inflation, a potential recession on the horizon, geopolitical events being what they are, people thought that would cause gold and silver to skyrocket, and it hasn't happened. Why do you think that is, and how do you see the precious metals moving forward?
Well, I'm perplexed. Gold made an all-time high a few weeks ago. What do you mean it hasn't? I'm sorry, do you know gold made an all-time high recently?
Yeah, yes. I think what I'm trying to say is that people are expecting a more dramatic move in both the metals themselves and the equities, which hasn't happened to the extent that they expected it. So what would you say to somebody who says that?
Well, I'm guess I'm not smart enough. I have seen gold and silver go up a lot many times and then go down a lot, especially when you have markets, stocks, bonds, other things going down. Usually gold and silver go down for a while too. If you go back to 2008 when we had a big bear market, price of gold collapsed, at least for a while. Now, it was one of the first things to rally and it went skyrocketing again. But no, I wish it were that simple. You just, when markets have problems, gold and silver go up. No, no, they usually go down. That's why I am not buying gold and silver at the moment anyway. I'm waiting. I have very bad market timing, but I'm assuming that somewhere along the line, I will buy more silver and gold, probably silver at today's prices, because silver is much cheaper on a historic basis. But no, throughout history, when things go bad or things go wrong, I'm a peasant. I'm an old peasant, Jesse. I know when things go bad, I want to have some gold in the closet. I want to have some silver under the bed. And I will buy more, just like all of us other old peasants, because we know that's a way to protect yourself. But it doesn't work every day, every month. I wish it did. Oh, wouldn't it be so easy? We'd all be rich. I wish it were that easy. No, you have to get the timing right on everything. But gold and silver usually will protect you when things are collapsing.
When it comes to silver, how do you feel about the industrial component? The fact that it's needed for so many of these solar panels, EVs, so many aspects of this so-called new green revolution. Do you factor that in at all when you think about silver moving forward, or does that not interest
Well, no, of course. I mean, I am delighted to know that we all use a lot of silver for a lot of things. Yes, that's one reason I own it. But my main reason for owning it is as protection when there's chaos, but it's just an added supplement to solar panels. Many things use and need silver more than gold. Gold is useful in jewelry more than anything else. It does have industrial uses, but nothing like silver. No, I'm delighted to hear that silver has industrial uses, but that's not the main reason I own it when I buy it.
So there's an energy crisis taking shape, particularly in Europe, and it has a lot of people worried. I think this was a train that was in motion before the Russia-Ukraine conflict, but of course now politicians are blaming it on the war, refusing to accept responsibility for many of their own short-sighted policies. I'm thinking about, Germany shutting down nuclear plants here. What's your view on this energy crisis that's beginning here, and what sort of opportunities do you see? Maybe oil and gas. What opportunities are there?
Well, known reserves of oil and gas have been declining for a long time, known reserves. Then along came fracking, which helped for a while, but the fracking bubble has burst now. We still have fracking, but it's nothing like the bubble that it was. But known reserves continue to decline. People like Germany and many places, we don't want your coal, we don't want your oil, we don't want your nuclear power. Well, now, of course, they realize, well, we'd rather have electricity. When we turn on the switch, we want the lights to go on. So a lot of those people are starting to re-examine the whole question. Nuclear power, for instance, is extremely safe, extremely cheap, extremely reliable. If you're careful, if you have a mistake with nuclear power, it's not fun. But otherwise, it's a very cheap and reliable. So a lot of this recent war, whatever you want to call it, is making people re-examine many of their questions about oil, gas, coal, nuclear energy, etc.
Right. And do you see any opportunity right there at the moment? I'm a big uranium bull. I also believe in oil and gas for the future. What energy producing commodity most catches your attention at the
Well,
moment?
I do own shares in a uranium company. I own shares in a coal. I'm a director of a coal company. No, no, all of this, I don't have. I hope I don't have political prejudices against saying that coal is terrible. Hillary Clinton said, put them out of business, close them all down. Well, I never felt that way. I like my electricity. So I look forward to more opportunities in energy of various kinds because I know most of us want electricity. We want to ride the bus. We want things to work when we need some kind of power.
So you're currently located in Singapore. You moved there in 2007, and you were quoted as saying, if you were smart in 1807, you moved to London. If you were smart in 1907, you moved to New York City. And if you were smart in 2007, you moved to Asia. What is the opportunity you saw there from an investment perspective? And China produces a ton of commodities. What commodities produced in Asia are you bullish on as well?
Well, there are 3 billion people in Asia. That's a billion with a B. And most of them don't have gigantic debts like we do in the West or Europe. So chances, and they work hard, they save their money, they're ambitious, they discipline their children. Oh my gosh, Jesse, they discipline their children, which we used to do in the US. So there's always some region and some country or countries rising, and there are always some declining. In my view, Asia was on the rise. I wanted my children to speak Chinese to prepare them for the 21st century. Doesn't mean they're going to live here or anything else. I just want them to be prepared. The only way I could do that I knew and make it efficient was to move to Asia. So we moved to Singapore so that my children would know Asia and speak Mandarin. It's pretty simple. They're going to be alive in the 21st century. I hope I am too, but they're going to be alive longer than I am in the 21st century.
So during a presentation at Oxford in 2010, you said that you thought the power was shifting from the financial centers to the producers of real goods. The place to be is in commodities, raw materials, natural resources. Suffice to say, some people might say that you were early, but absolutely correct in your assessment. As we sit here in 2022, do you maintain the same sentiment, and how do you see commodities playing out over the next decade? Are we in for a commodity super cycle up ahead here?
But yes, you always have to be early, if you, and especially in something like that. You can't just wake up one morning and say, "I'm going to be a farmer." I mean, you have to learn what you're doing. You have to find the farm, et cetera, et cetera. If you're not early, you're going to be ruined. If you do it at the last minute, I assure you, you're going to be ruined. In my view, I certainly can see the shifts taking place. You know what's happened to the price of oil. People who are in the oil business made a lot of money in the last few years. Copper, I mean, my gosh, copper went through the roof. Many of these things have gone through the roof, and that has been a wise decision. I mean, listen, I make plenty of mistakes. Don't think I don't make mistakes. But in my view, stocks, bonds, certainly bonds are in a bubble. Bonds have never been this expensive in the history of the world. Property in many countries is certainly in a bubble. Go to Korea, go to Australia, go to New Zealand. I mean, many places. Property is in a serious bubble, not everywhere, but many places. Stocks were forming bubbles that we had. I mean, 10 cent went up every day. Samsung went up every day. Apple, you know the names. So stocks do have some bubbles. The only asset class I know that's still very cheap is commodities. I mean, silver is down 70% from its all-time high. That's not a bubble when you say something's down 70% from its all-time high. Sugar, likewise. So we're not having, at least on a historic basis, many commodities are still cheap. And if we're going to have inflation and banks are going to print more money, if you have inflation and you own the things that go up in price, you usually do fine. In fact, you usually make a lot of money. And when there's inflation, the price of commodities go up.
And how do you see the inflation narrative playing out? Do you see this being a persistent problem continuing for years to come? I mean, it's going to be very difficult, obviously, to get anywhere near the Fed's 2% target in the foreseeable future. Do you think this is going to be a persistent problem? And is that one of the reasons you're bullish on commodities?
Well, the last time we had a huge commodity problem was 40 years ago. It does come around. These things don't happen once a decade, once a century, I mean. They do happen. Governments print money. Most of the bureaucrats and central banks don't have a clue. They're academics or bureaucrats. They don't know what they're doing. And when there's a problem, they're going to try to save their jobs, and that means they're going to print more money. Not every day. If you go back to previous commodity booms, they don't go up every day or every month even. But the trend is pretty clear. These guys are going to print money. Now, for instance, though, Jesse, if there's peace in Ukraine, I said if, then the price of oil is going to come down. The price of grains are going to come down. So everybody's going to, the central banks are all going to say, we solved the problem. We did it. We did it. And then they'll start loosening up again. And so inflation is coming back. Don't think inflation's gone away. Oh, no, no, no. And if you believe that, then you should go to work for the central bank because they say it every day.
So I want to touch on investor psychology a little bit here. It's a part of the game I think that's so underappreciated. And as someone who's been through a lot of ups and downs, recessions and bear markets, do you have any advice for investors, particularly those who've never been in a bear market like we're probably seeing unfold here? How does one cope with that psychologically?
Well, the simple answer is don't invest in anything unless you yourself know what you're doing. You listen to some guy on the internet. If I told you to buy X, Jess, and you went and bought it and it went up, you wouldn't know what to do because you don't know why you bought it. You don't know whether you should buy more or sell it. If it went down, you would know what to do. You would say, that Jim Rogers told me to buy this. He's a fool and it went down. Don't ever listen to him. I know what you would do if it went down, and everybody would. So the answer is just stay with what you know. If you invest in things that you understand, you will know what happens if things go right. You will know if things go wrong, and you will know what to do. But if you listen to some guy on the internet, you don't have a clue, and you're bound. Please, my best advice is do not listen to hot tips. Now, Jesse, everybody wants a hot tip. Everybody wants to be rich this week. I do too. I want to be rich this week too. But I have learned that hot tips will send you to the poorhouse.
Well, Mr. Jim Rogers, it's been an awesome conversation. Thank you so much for joining us today. For anybody who wants to hear more from you, where's the best place to find you online?
I don't have anything to sell, Jesse. I mean, I have a website, but it's it's my trips and adventures. I'm sorry, I don't have anything to sell. The jimrogers.com is my website, but I don't have it. There's nothing there, not much there.
Okay, well, I'll put a link in the description below anyways. And thank you so much for coming on today, and hope to have you on in the future to continue the conversation.
I hope we can do it again too, because commodities will have a good time in the next decade or two.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.